this is, I guess, reminiscent, Courtney, of last year with the way the trade war kind of wound down. We kind of started the year last year thinking that we were eventually going to end up at a phase one resolution, which we ultimately did. But along the way, we really had some bumps. We had some, we had some issues in resolving that. And of course, every time we did, the market would drop fairly substantially. Now, this isn't going to last a year. I mean, we're going to get through the coronavirus. There's no doubt about it. But, China was saying just yesterday that things were looking pretty good. We were on a good trend, and then all of a sudden, boom, we get this report that cases are up dramatically. So yes, I mean, as you kind of pointed out at the beginning of the show, all three major indices hit record highs yesterday. So the market's looking for an excuse to pull back, and this is certainly a good excuse.
An excuse. Okay. We've definitely heard that before. That's for certain. I want to get your take on Goldman Sachs CEO David Solomon. So he was weighing in sort of on the debate over Bernie Sanders' front-runner status and what impact, if any, a White House win for him in 2020 could have on the markets. I want you to take a listen to this.
Look at the markets. The markets at the moment don't care about any of this because it's too early. It's really too early for it to have an impact on markets. And there's also a huge difference between campaigning platforms, rhetoric, and then ultimately getting elected, becoming the president, having the right mix of who's in Congress, who's in the Senate to actually create legislation. And so I think the markets are sending you a signal that this is all very interesting. We all care about it. It's important stuff, but it's not something we're spending a lot of time worrying about.
Now, Rob, this, of course, follows comments from both Lloyd Blankfein and Treasury Secretary Steven Mnuchin that a Sanders win in 2020 could wreck the U.S. economy. So where do you stand? Do you think it's sort of too early for us to worry about it or not? Or will it not wreck the economy if Sanders is indeed the candidate and potentially the president?
Well, I guess I heard a couple of things from David that I would certainly agree with, and you just touched on one. It's too early for the markets to really worry about any of this. The second point that he made that I think is also very relevant here is that whoever does win the Democratic nomination, whether it's Senator Sanders or someone else, they will have to come to the center somewhat, and I guess my bottom line right now is the market is really unenthused about incorporating any of this into forward-looking projections, and what I definitely wouldn't agree with the statement that of Sanders' win would wreck the economy.
Okay, fair enough. I want to go back to your earlier point about this pullback here today potentially looking like an excuse and therefore perhaps an opportunity if you think things will not remain depressed at where we sit. So if you're an investor, you've got money to put to work, what would you be doing here?
I'm definitely a buy on the dips person right now, Courtney. I continue to like stocks here, even though they hit record highs yesterday. You know, earnings growth last year was pretty terrible, but that sets up for easy comparisons this year. So I think we're going to see earnings growth this year that's approaching double digits, at least 9–10%. And as far as, I guess, kind of getting into a little more of the macro view there, the Fed would prefer not to touch rates this year with the presidential election, but I do think their next move will be to cut rates. That's probably going to push the dollar down a little bit. That's going to help big cap multinationals. So I'd overweight large cap growth stocks here versus small cap value stocks, as well as the international space. And you can see on the screen the sectors that I like and would also underweight as well within the S&P 500.